Okay, welcome everybody to this weekend market analysis. Well, we've not conducted this analysis for for the last week. All right, that's because the last two trading weeks were just weeks of market confusion. It was evident in all of the charts, and of course, for some of the trades that we took, we saw how that impacted negatively in those few trades. Well, we are going to look into the charts once more just to decide on which directional bias and what is suitable for us to trade in this upcoming trading week. First, and as usual, let's look into the Forex Factory economical calendar to see the fundamental structure for this upcoming trading week. All right, so you can see very clearly the Monday, 12th of October, we will be having bank holiday from the USA, United States of America, and also from Canada. You should, by this hint, you should expect a slow market trading day for Monday, the 12th of October. Nothing much is expected on Monday. All right, Tuesday, no high impact news announcement. Then Wednesday to Friday, we have all of these high impact news announcement scheduled. Most important of this high impact news announcement is the employment data that will be released from the Australian axis. And so on Thursday, you need to give special attention to Australian dollar crosses because this news announcement can in fact impact the currency crosses significantly. All right, let's move into the charts very quickly without any waste of time. The most interesting pair in this review that I am actually following, that we are following for this upcoming trading week, is the New Zealand dollar against the Canadian dollar. If you look into the monthly time frame, you will see that price is actually trading around a key resistance area in the monthly time frame. You can see how price has been respecting that zone, and right now price is hugging that line, which is a key resistance zone. Okay, and so if you find any valid short opportunity based on your strategy, you should be looking for nice pushes to the downside in the New Zealand dollar against the Canadian dollar. Let's see the weekly time frame. Weekly time frame, let me just quickly take out this level, just keep it within the monthly time frame. All right, so in the weekly time frame, you can actually see that we had anticipated this possible channel formation. All right, possible channel formation. So the next directional bias should be to the downside, where we can see a bounce or a break to the downside. So we should be more interested in looking for short opportunities in the New Zealand dollar against the Canadian dollar if that channel is to hold true. The daily time frame, well, I am really following this here. You can see the price gave us that level of support. This was previously resistance right there. Again, that's a fake breakout. All right, it's a fake breakout. Then we got the solid breakout to the downside. You can see that breakout, and price is now pulling back to retest that former support level, which may now act as resistance. And so we should have all eyes around this level. Okay, we should have all eyes around this level because price is likely going to turn back down. We should be looking for a short opportunity in the New Zealand dollar against the Canadian dollar. Again, for those of you who like the concept of shoulder head shoulder pattern formation, all right, shoulder head shoulder pattern formation, you will see that price has actually broken that neckline. All right, broken the neckline, and so we're getting the pullback. From there on, we should have price go back down heavily in the New Zealand dollar against the Canadian dollar. So we'll be following this pair very closely, looking for possible short entries in the forwards time frame. Well, we will also be following here closely if price retraces somewhere around the trend line in the 4 hours time frame. That's the trend line there. Somewhere in there is the last level of resistance, and so we expect to see price come down in the New Zealand dollar against the Canadian dollar. This is a nice setup. It is of course of good quality. I don't expect this to actually fail, just like our recent experience. All right, let's move on to the next pair. I'm going to review some of those pairs that we took entries as of last 2 weeks, and just see what's been going on in the euro against the Japanese yen. Well, this was a key level of resistance right there. Price came retested that level, but you can see for the last 2 weeks, the hesitation was just too much. Just look at the type of candles. Price just kept hesitating around that area. Right, that's the confusion I was talking about. It was really unexpected to have this kind of price behavior. With this low volume market here, anything can still happen. It is highly unpredictable right now. Okay, it could keep pushing to the upside, it could drop back down in heavy momentum. So it is highly unpredictable, but still trading around resistance area. And it is highly, all right, highly forbidden to hit on your buy button at that particular area. At best, you want to keep searching for short opportunities in the euro against the Japanese yen. This is resistance zone, and so you should not be hitting on your buy button at that particular area. Again, if you look into the very long term, you will see that price has already took off so high, all right, of course, to that expanding triangle upper leg. At this very area is not a good point for you to look for long entries. With this run to the upside, it's expected that price should at least make some pullback before maybe a push to the upside or a continuation to retest the lower leg. So this is not an area to look for buy entries. At best, we may have a range. If you look into the weekly time frame, at best we may have a range. All right, we may have a range, price just swinging up and down, flat bias right here. This is not a place you want to look for buy entries. All right, so we are still hopeful that price in the euro against the Japanese yen will make that fall to the downside. Let's move on to the next pair, the American dollar against the Swiss franc. Well, to my greatest surprise, this is one of those pairs that we got stopped out as of last week. Well, the market has its way of making traders look stupid, especially on the basis of fundamental announcements. All right, the Trump coronavirus infection actually worsened the American dollar situation. It weakened the American dollar, even though we thought we are going to get good news that he will be out of the hospital as of last week, to strengthen the American dollar in line with our technical analysis. That didn't happen. On Friday, we saw that massive drop to the downside in the American dollar against the Swiss franc. And so we are taking out of this trade, we're taking out of this pair after much hesitation right there. Okay, you can see the hesitation within our entry zone where we expected price to push to the upside. Then Friday, we saw that drop right there, taking us out of that trade. Well, that is just normal, and we need to close our eyes. We don't need to be discouraged. Just close our eyes and be hopeful that we will get better trades in the future. Now, what next in the American dollar against the Swiss franc? Well, all of this pattern right here, this hesitation here, has come to an end. Price is now looking for a new pattern, which is possibly a range. It's possibly going to be a sideways bias, maybe a triangle. Okay, maybe a triangle where we can see another bounce from here on, or a standard range where we have these two levels here, one as support and the other as resistance. So we are expecting the price will keep swinging up and down, maybe to find a new pattern in the American dollar against the Swiss franc. Again, this is not an area to look for short entries. Okay, if you look into the very long term, you will see that price has actually made a lot of pushes to the downside. You can see that fall to the downside. It is time for a pullback. All right, it's time for a pullback, and so you don't want to be hitting on your sell button around this zone. You want to wait, get the best of long opportunities, and take your entries. In the weekly time frame, well, again, we are expecting that possibility of a range. Okay, maybe that's the worst ranging scenario, but hey, trust me, price may not push to the downside any further. Right, may not push to the downside any further. You're highly discouraged to look for short opportunities around this zone. All right, let's move on. Let's see what's going on. Okay, in the Australian dollar against the Canadian dollar, we took a short entry in this pair and is sitting in some small profit after some run to the downside. Well, as you can also see, it is a non-directional market. It is sideways. The bias has not really been established. We thought that price will just break to the downside in this pair, but then Friday is actually changing the story and making it look bleak. And so once the market opens, we are likely going to close out this trade for some small profit and wait for better opportunities. Okay. So I think that is just what we'll just do. We don't want to trade in this type of sideways bias right here, because market is still ranging. The market is still in heavy ranges right here. We want it to break either to the downside or to the upside, and our expectation is that it will break to the downside for us to keep looking for short opportunities. All right, let's see what next. Australian dollar against the American dollar. This is another one that I had hoped that the price, after retesting that area, we could see some nice pushes to the downside. But then you can see how price has begun to push to the upside. Well, the directional bias is still bleak. We have a trend line somewhere in the air. Okay, some resistance there. You may also have the possibility of a channel formation right here. Okay, so this is really not clear. Anything can happen, but you need to know that you need to know that price is trading at a very high zone. After this run to the upside, it is trading at that very high area. The worst that can happen is to have a range. Okay, is to have a range. Price need to take a breather, and so you're highly discouraged not to hit on your buy button around those zones. Okay. All right, sterling pounds against Japanese yen. This one here looks really murky, but then price might be facing resistance area somewhere around in there, because this rising trend line, even though it is not looking very attractive, you can see the massive breakout candle right there. Okay, breaking that trend line to the downside, and now we are seeing pullback, and pullback usually takes the form of retracing back to the breakout point somewhere in there, somewhere around it. Okay, and so that is where we should be expecting resistance in the sterling pounds against the Japanese yen. From there on, we may see price come back down. All right, so you need to be again hesitant hitting on your buy button against that area that we are talking about, the that area right there. It's resistance zone. All right, sterling pounds against the Canadian dollar. You can see the price has been in some form of a channel, but the optimal direction here is still to the downside. The ultimate direction for this pair is still to the downside. Once this channel breaks, we are going to see further downside in the sterling pounds against the Canadian dollar. We'll keep following this. If we find any valid entry, of course, we will let you know. So be careful hitting on your buy button. Price is actually trading around resistance area. If you look that in the weekly time frame, that's resistance zone. From here on, we expect price to come back down. Okay. All right, let's look into the euro against the American dollar. This is the last pair in this review. The euro against the American dollar again gave us that unexpected price action. This is a key area of resistance. Price went all the way to that zone. Then from there on, much hesitation, and Friday we saw that push to the upside. Just like the American dollar against the Swiss franc, this has beaten our expectation, and so we are expecting now that this might be another new pattern formation. As all of this came to an end, this range here came to an end, we should now be expecting another pattern, maybe from here on, possibly a range, possibly that range, okay, or a break to the downside. You could get a flat, a sideways price behavior. So anything can happen here for the euro against the American dollar. All right, so not the best of times, but we hope that the future carries much more potentials, especially once the coronavirus pandemic is off, we will get a better price action and make more money out of the market. Thanks for being here. Thanks for your patience. If you have questions or contributions, please feel free, send them across to us, and we'll be very happy to respond to them. Do have a nice trading week ahead. Bye bye.